Yeah, we try not to take a view on where the market's going in the short term. There are a number of risks out there. We have the Brexit referendum coming up, and we could see uncertainty over that. There are some industries, such as the oil industry and companies related to oil, who are clearly finding life tough at the moment. So there are a number of risks out there. But having said that, in general, we find good value in the market. And particularly in the areas we're invested, many companies look really quite cheap. There are pockets of the market that look expensive. Some of the more defensive names, some of the consumer staples companies don't offer very good value to us. But most of the market looks quite cheap, and certainly we're finding companies that are really interesting. Yes, we have. I mean, I think the quite extreme volatility we've had in the last 2 or 3 months has brought a number of shares into interesting territory. So we've been adding to some of the financial stocks like Lloyds Bank and Prudential, Marks and Spencers, which fell out after Christmas, and equally taking profits in shares that have held up or much better or performed well. Some of the utilities, National Grid, Pennon, and IG Group, which has benefited from volatility. So yeah, we've been using this volatility actually to reposition the portfolio very modestly, but to take advantage of those opportunities. Yeah, it's a good question. Actually, it's a combination. There are stocks that have been in the portfolio for a long term that have generated significant income and income growth over time, such as Royal Dutch Shell, GlaxoSmithKline, and there are other companies that come and go. And one of the great things about income investing is that there's a natural rotation in the portfolio. Shares get depressed, the yield goes up, we may buy them at a good opportunity. As they perform, as they recover, the yield drops, and often we'll sell them again and move on. So there are shares that come in and go out of the portfolio, and there are others that have been there for quite a long time. But I wouldn't say there's any type of company that we always own. Well, one of the good things about the UK, and particularly the FTSE 100 index of large companies, is they are very internationally, multinationally diversified. So the vast majority of sales and profits comes from abroad, and therefore whatever may happen in the Brexit referendum, many of those companies won't be too badly affected. But I think it would be wrong to focus too much attention on the Brexit issue within the portfolio. I think the key is to buy good companies that have a sound competitive position and are trading at a reasonable valuation. And most of those businesses, and certainly the ones we look at, wouldn't be too badly affected either way by the result of the referendum. And the key is really to find good businesses to invest in. There may be some volatility in the short term, but if the valuation is cheap enough, you can look through that and take advantage of that.